Hey everyone, and welcome to the Bookmindr Dental Accounting Podcast, a conversation where we take the boring out of accounting and help dentists build financially smart practices. Today, we're going to tackle a question every aspiring dentist asks. What type of business entity should I do? Since everyone's perspective is different, this is not a tax or legal advice, so please consult with your CPA. So, instead of listing the choices as an alphabet soup, let's look at them from your perspective. If you are starting your practice or you want to keep things simple, you should look first at LLCs. If your state allows it for a dental practice, that would usually be a professional LLC or a PLLC. This is probably the most popular choice for dental practices, especially for small ones. So, what makes it so good? The benefits of an LLC: easy to set up. LLCs are relatively simple to form, especially compared to other business structures. There's minimal paperwork and administrative work. There's limited liability protection. One of the biggest benefits is the protection it offers you as the owner. It keeps your personal assets separate from your business. So, if your practice gets sued, you generally won't be held personally responsible. The tax structure of an LLC is flexible. By default, there is a single owner. It's taxed as a disregarded entity. So by default, if you are the single owner, then it's taxed as a disregarded entity. The first time I heard that, I said, why disregarded? I think I don't want to be disregarded. I want to be regarded and respected. But essentially, all that means is that the return is reported onto your personal taxes. So that helps keep things simple. If there are more owners, however, the LLC is going to be taxed as a partnership. So it means that it has to be reported on its totally separate return. That would be Form 1065. Another benefit is that unlike C-Corps, LLCs are not double taxed. Instead, the profits go straight through to your personal tax return. Last but not least, at a later time, if you want also to change it, you can easily elect an S-Corporation status and then you'll be taxed as an S-Corp. So, what are the downsides of an LLC? Self-employment taxes. If you are taxed as a sole proprietor or partnership, you still be paying self-employment taxes on all of your practice income. In other words, you'd be taxed a self-employment tax on all your entire earnings. This is not necessarily a bad thing since there is a cap anyways, and the taxes paid are going to contribute to your social security. Actionable tip: if you're just starting out or running a small dental practice, an LLC can be an excellent option due to its simplicity, limited liability, and flexible structure. You don't need to even listen further to this podcast. Just do an LLC. So, what are the other options? Business structure number 2, S-Corps. If you are expecting to have a great year, let's say more than 200 per year, although there is no set amount, we have the S-Corp. This is a tax designation that can save you a lot on self-employment taxes, but it also comes with more administrative work than an LLC. The benefits of an S-Corp: tax savings on self-employment taxes. This is the main reason dentists choose to go with an S-Corp. If you are making a solid income, let's say again more than 200K per year, you'll be able to pay yourself a reasonable salary, and then any remaining profits can be distributed to you as dividends, which is not subject to self-employment. This can save you thousands in taxes, despite the complexity. Like an LLC, an S-Corp also provides limited liability protection, and again, this means that your assets are typically protected from business-related liabilities. Downsides of an S-Corp: more administrative work. The S-Corp has more paperwork and formalities than an LLC. You need to file annual tax returns separately, Form 1120-S, keep track of salaries, hire a payroll provider even for the owner, and maintain corporate minutes and records. Also, there's the reasonable salary requirement. You must pay yourself a reasonable salary for the work you do in the business. But the tricky part is there is no definition of a reasonable salary. Nope, you can't pay yourself just $60,000 and call it reasonable. just because, let's say, you can cover your expenses, because the IRS is going to say, no, it's not reasonable. And you can say, yeah, it's reasonable. They'll say, no, not reasonable. So guess who is going to win? It's not going to be you, and you're going to have to owe interest and penalties. Actionable tip: if your practice is bringing in substantial income and you want to reduce your self-employment taxes, an S-Corp might be a great option. Just be prepared to do the extra paperwork and make sure you're paying yourself a reasonable salary to avoid the IRS penalties. And the reasonable salary has to be backed by solid documentation that compares your salary to the other dentists in your area. Now let's talk briefly about the C-Corp. This structure is more common for larger businesses or those with multiple owners. It's not typically necessary for small sole practices, but it does have its place if you're looking to grow significantly. The benefits of a C-Corp is that, like the LLC and S-Corp, they provide limited liability protection, but when you're raising capital, one of the biggest advantages of a C-Corp is its ability to issue multiple classes of stock, which can help raise capital and attract sophisticated investors. The downside of a C-Corp: the biggest drawback is that C-Corps are subject to double taxation. This means the corporation pays itself taxes on its profit, and then you have to pay taxes again when you distribute dividends to shareholders. There's also complexity. C-Corps have the most complex regulatory requirements and are more expensive to set up and maintain. You need to have formal meetings, file extensive records, and adhere to strict corporate governance. Okay, dentists, that's a wrap. Business structure may not be as fun as placing implants, but it's foundational to your success. There's no one-size-fits-all solution, so please discuss with your CPA or legal advisor. The key takeaways, however: if you're just starting out, a single-member LLC may be your best bet. This is the easiest, most widely used form, and later you can easily change it. If you're earning a solid income and want to save on taxes, an S-Corp could work for you despite its increased complexity. If you're growing rapidly or bringing on sophisticated investors, a C-Corp might be the way to go. And if you have a partner, a partnership may make the most sense, but make sure to have a strong partnership agreement in place. Thanks for listening. If you have any questions, feel free to reach out or just leave a comment below. We'll try to answer everyone. Thank you.